Today is August 20th, 2025. Call it longer term bullish, but with short term breakdown risk structure. And I had continued to hype and harp, and especially in my previous video, how imperative it was. Call it the macro ascending concealed uptrend price support level, and we back tested that twice and put in a nice clean confirmed divergent high with negative and bearish divergences constructed on all four key technical momentum indicators, which was the precipice for the 2025 sell signal liquidity shock. You had that first initial breakdown sell signal, you had a clean back test on a counter trend rally, and that was the beginning stages of a great, nice, clean bull flag continuation pattern. And that level is, once again, going down as a very premier and deep psychological macro ascending trend line. You had the bottom, it additionally called the bottom of the 2024 deflationary scare. You had an additional back test and retest right before breaking out. In October of 2023, it called the low. That was the downtrend price support level that was taken out. Call it the AI backtest trade, and it was off to the races during that entire span of time. It was the AI is everything rally, and that called the bottom. You had an additional backtest and or retest, which called the Silicon Valley bankrupt lows, and that was a huge regional crisis, which obviously, with the Fed's backstop in the banking fund term program, and it was off to the races. Once again, you had additional reaction. You had reactionary lows. You had some additional reactionary highs across that entire span of time. And that was initially the bottom, called the bottom of the October 2020, the great bear market of 2022 lows there. And that was your intermediate cycle low, which was the fastest velocity and rate hikes in history. And you get the picture. This level has been a psychological level, and each and every time it has been confronted, it has been confronted with the absolute most respect. And learning that as of now, in the near term, you have those two initial back tests and or retests, which initially sparked the divergent high. We had a nice clean save, stick line save today. Looks like we were going to get that solidified, validated red candle sell signal close, and bulls ate it up right into the close. And here we are, dancing and closing right on top of the primary ascending uptrend line. Cuts right through the gap. You have additional reactionary highs and lows across that entire sphere there. And watch for the 22,900 handle to go. Tomorrow, if we have a really bad sell-off into the close, that could initiate the breakdown sell signal, in which only confirmed and infuse additional damage into some of these key technical momentum indicators. And that will be the biggest telltale and the biggest clue upon taking out the 1.618 fib support level in confluence of the ascending uptrend price support level. And then I really believe that a ton of stops and or margin calls will really begin to take off upon undercutting the 22,900 level there. And that's what bears want to see. They want to see a solidified breakdown sell signal into the close to validate it, and additional stops to go off, forced margin calls, ultimately transpiring into a longer term trend change. Because if these zones continue to fail, downside retracement could only continue to accelerate here. With the RSI printing below the 50 handle, now around the 48, you are beginning to roll over, slipping under the 50, and momentum is beginning to fade. You have a confirmed bearish crossover in the MACD, and that was a very wide spread in the gap of the signal line there. Nice, clean, big time breakdown there in the moving average convergence. You have an undercut of the histogram printing an additional momentum fade there. So make no mistake, bearish momentum is creeping in, as the MACD begins to weaken and the histogram begins to unleash negatively under the zero line threshold. So you have a clear loss of bullish pressure within the technical momentum indicator realm, but it's not a collapse quite yet. And I believe a breakdown sell signal below that trend line ought to usher in a validated sell signal. Bull traders, long traders, they want to successfully defend the 22,900 handle really at all costs to avert further damage within the technical realm, and then ultimately re-challenge the 23,600 handle, pop that level, ultimately taking it out to re-challenge these negative and bearish divergences that have been constructed on multiple indicators at a chance of burning them out and re-challenging the macro uptrend price support level, which will most likely come in confluence with a 2,618 fib extension called the 24,563 handle, and that will be imperative for bulls to take out and put the squeeze on short sellers. The NASDAQ is rolling over from a textbook rising wedge setup right at the 1.618 fib extension. And this is the macro pivot point where the market chooses between continuation into the 24,500 or a retracement into the low 22,000 handle. The technical realm has yet to have spoken, but bulls need Jackson Hole's Symposium.